Hi everybody, hope you can see my screen, hope you can hear me okay. I've even remembered to switch my microphone on, which is a miracle in itself. Just move the chat box out of the way. Nice bit of price action developing, which you saw on Anna's NQ. In fact, if I hop over onto the multiple charts with the NQ on, which I've got here, let's move that out of the way. This is on the daily. We had some fantastic price action yesterday on the daily. In fact, I've got something I just want to share with you that was an annotated chart which put up on Facebook, I think it was last night maybe. So I just want to share that one because there was fantastic price action and it really was a classic example of textbook example of VPA in action. But this is what we're seeing at the moment. This is on the daily, so pretty narrow. But I mean, there's even divergence now, as you can see here. We've got the YM is trying to rally, is desperately trying to rally a little bit. The NQ is starting to fall away quite sharply now, and the ES is really struggling to hold its position here as well. So we're trading in a pretty thin area at the moment. The overall view, if you like, from a longer term perspective, and we wrote about this yesterday or the day before, I think, is very much the fact that this is very fragile at the moment. It's looking very weak. This was the Columbus Day candle, where we had this very strong rally, which was in itself unusual because markets were theoretically closed, people on holiday, obviously on a public holiday. But nevertheless, we had this dramatic rally. And to be honest, it's something you see a lot, and it's something you will see particularly in the run up to Christmas, where the markets are much thinner after maybe sort of certainly the second week in December. That's when you will see a lot of volatility. You will see a lot of this sort of price action, very rapid moves on thin volumes. It's a classic time when the market makers are in there really moving the markets around quite rapidly, making lots of money for themselves because it's all a very unusual type of pricing because of the thin nature of the markets. We then came into this candle at the top here, equal volume as the day before. Look where the market's gone absolutely nowhere. Is that strong or weak? Certainly looking very weak. And then we get the waterfall starts to develop. Question of where this market's going. Well, the first stopping point is clearly somewhere down at the VPOC, so we've got another 300 or 400 points to go. And then in a big daily move, that could happen in a day. Under normal circumstances, it wouldn't, but in the current market environment, it could well happen. So that's what we're looking at the moment. It's longer term, it's been bullish, but certainly on an intraday basis, it's starting to look pretty fragile across the piece. Top line is the 5 minutes. We've got the YM, the NQ, and the ES strung out along the top line, and you can really see I know we've been looking at this one before. This is on 5 minute. I think Anna was on 3 minute. We had the volatility trigger, trying to rally, big wick to the upper body, big wick to the upper body, another wick to the upper body. So there's lots of weakness around here. This is not a market that's going to rally higher. This is a market that's going to roll probably down to the volume point of control on 5 here, which is where you would expect it to sit, and maybe we're going to congest around there for the rest of the session, who knows. In addition to that, you've also got these very strong levels of price resistance coming into play, this one particularly, which really capped it off. You had another one above it and a slightly weaker level up here. So this was 1, 3, and this was 6 or 7, I think, under here. So this was pretty strong and capped it off. Now we're coming back down to the volume point of control on that time frame. Let's go over onto the YM. There we go, multiple time frames. This is what I've got here. So, this is the YM trying to rally, and yet the NQ is looking pretty weak. So it's against that sort of context. I've got the 15 second, the 1 minute, the 3 minute along the top, 5 minute, 10 minute, and 15 minute. And as I always say, when you're trying to trade in these sorts of markets, if the market is in a congestion phase, which it is at the moment, then you've got to step down onto these very fast time frames. If you actually want to take a few trades and snick a few points here and there, then this is the time frame you need to be on, and certainly not on anything slower than a 1 minute, 2 minute, something like that. So you have to step down sub a minute, in my humble opinion. Been doing this for a while, so we do have a reasonable amount of experience of doing it. You can see this is just to give you a timeline, if you will. Just back here is 3 o'clock UK time, so that was sort of half an hour into the session. We're now moving towards 3:30 here. This is the 15 second chart, so there's a lot of candles here. But you can see VPA in action. Big wick here to the upper body, lots of volume coming in. In fact, the highest volume up to that point. it's weak, it's not looking terribly strong. You get an engulfing candle, then you get confirmation of the weakness, lots of volume driven into that one. Down we go, but we're not going very far because we're coming down to the volume point of control here. So we're going to oscillate around this point for the time being. We need to see a breakaway if we're going to do anything. Up onto the 1 minute, what do we see on the 1 minute? Similar sort of picture now. We're going back to 2:30 here, which was the open, the cash markets and Globex then running in parallel. You get all the volume surge come in, then it starts to settle down. Then you get all these attempts to rally. And really what VPA is about is giving you, it's not about taking signals off one particular candle. It's just about giving you an indicative sense of the weakness or the strength. And a lot of that is really looking at the candles and whether you have more wicks to the upper body or the lower body. Obviously, if they're more to the upper body, then it's starting to look weak because the market is trying to constantly rally and fall back. It's rallying and falling back all the time. If you've got more to the lower side, then obviously that is, there's buying coming into the market's falling, but it's being bought. It falls, it's being bought. That's really what you're looking for. It's not about looking at one candle and saying, oh, fantastic, great signal, the market's gonna roll. It's like this candle will come in here. Yeah, it's weak. We've seen weakness here. We've got, long-legged doji, so there's indecision. Market tries to rally. We've got, little signs of weakness here. Market tries to rally again. Volume's not huge there. Then we get this one. Okay, that's not looking terribly strong either because we've got lots of volume and a weak candle. Market falls away, the selling pressure is falling away, then we try and rally again, another big wick to the upper body, so again it's not looking great. Then we try to rally, then we get an increase in volume and the market tries to get through this region and still can't. So it's a combination of all these factors which you put together and give you a sense of how the market is at that particular juncture. Then you start to see the break coming. Got nice wick, nice wide candle, good volume under it, so decent selling under that particular candle. Now what are we doing? Well, we've moved down into this wedge of volume here, and in the same way that you need volume to move higher, so indeed you need volume to move lower. So it is going to take effort. If this is going to break through here, through this wedge of volume and get down to this low volume node here, which it looks as though it is, then it's going to take some effort to do that. If we get down to 240, which is 15, 16 points below here, then it should move through that area pretty quickly, down towards 230. And obviously, once you get down to this level, then what are we expecting? Well, we're expecting congestion for several reasons. First of all, because we've got the volume point of control sitting here again, which is the highest area of volume. And secondly, you've got a lot of price-based support, which is going to come into play. You've got this guy here and this one below it. So in this region between 210 and 220, there are two very strong reasons to expect the market to congest. In other words, return to where we pretty much opened the market over here at 230. So, if you were going to trade this short, not going to be in here for too long because, there's plenty to take. This is 58 down to 10. If you think it's going to move through there pretty smoothly, 40 points is not a bad haul on the YM at $5 a point. It's $200. But the question you've got to ask is, how quickly is that going to move through, and how soon is it going to hit some support areas, either from a volume-based perspective at a much higher level here, up at 230, or down at 220, where almost certainly it will start to run into trouble. And that's the question you're always asking yourself when you're going to take a trade to this market, any market. You look at the chart, you look at it in multiple time frames, and the question you ask is, well, what is going to cause that particular instrument to pause? And have I got enough points? Am I happy with my potential point grab, my bag of points? If I'm going to put this much risk on the table, if I'm going to risk $100 or $200 here, are there $300-400 in it in terms of looking at it from a price-based perspective? This is not about looking at it from a risk and reward potential, like a lot of traders try and do. They say, well, I have to have 3 to 1 before I open a trade. Well, fine, good luck to you. We look at it from the perspective of looking at it from the chart and what the chart is telling you, because the chart lays all this information out, and it would be pretty crass not to take that information which is freely available. And it's telling you whether this chart is going to deliver for you or whether the price action is going to struggle. And it's what we do on every single trade we ever take. And you do it across the multiple time frames. So obviously be up onto the 3 minute now. Slightly slower. Let's see what we've got here. Well, where are we? Well, we're trading around the volume point of control again. So from a perspective there, and there's a huge amount of volume top and bottom. There's a very strong area of these clusters of support on the accumulation distribution indicator, which paints these lines automatically to the thickness or the strength that they represent. So the thicker the line, the stronger they are. This one's been tested and held 6 times, so it's pretty strong. But where you get a cluster of them, you've got another one here which has been tested 3 times, where you get these clusters of them, that is a strong level. It's a strong platform that is inevitably going to come into play if you take a position to the short side. So again, it's a question of judgment and looking at what you've got across the time frames. Yes, you've got a low volume node sitting in the middle of it here, but that's a very small slice of price action, and judged against the volume that you've got sitting below it here, which is huge. For this to move through, you've really got to see a rise in volume. If this is going to break down in any meaningful way, then you've got to see a rise in volume. So you're seeing falling price and rising volume, and preferably widening spreads as well. So the picture is pretty much the same. You go up onto the 10 minute. This is what we saw on the 10 minute. Why did the market reverse? Well, one of the reasons is we had a volatility trigger on 10. And look at the volume under it, nothing like the volume we had at the open. So it's telling you that this is pretty much a trap move. The market makers are not participating in that particularly. They're just moving the price higher. They're going to trap you into a weak position. And then you've got these big wick candles at the top, these two, telling you the market's going to go lower. Then you get a little bit of buying coming under this one. The wick here is, so you've definitely got some buying coming in under there. Is it enough to reverse it? Doesn't look like it, because we're now developing a wick to the upper body here as well. And again, where are we going back to? Volume point of control down at 240. So there's lots of stuff in the way of taking a short position right now, certainly across the faster time frames. And then up onto the 15 minute finally. And again, we've got volatility candles everywhere, and I'm sure many of you come along regularly, you'll know with the volatility candle what to expect. You either get congestion or you get a full-blown reversal. So it's what you expect to see. We're also trading around R3 on the Camarilla levels indicator, which is a key level. I won't go into that one right now, because what I want to do is just hop over onto oil. In fact, let me just pull this over just while that's where it is. This was the chart I was talking about. It's up on Facebook, so you can go and have a look at it there. But this was late on I say late on, it was sort of early evening. And it also highlights the whole business of patience. If you're going to be trading breakaways, breakouts, then you've got to be patient. You've got to wait for these things to come. What it also highlights is the advantages of trading that particular tactical approach are many. There are disadvantages. One of them is you've got to be patient, as I say, but the other one that is a huge advantage is, as you can see, when you get these levels building, you have the volume point of control which sits in the middle, and then you get these very strong areas of both support and resistance developed on the accumulation distribution indicator, which give you very well-defined levels against which to set your stop loss in position. And once the market starts to break down, which indeed it does under the first candle with a nice increase in volume here, so it's just confirming that weakness for you and also breaking down into this low volume area. Once it starts to do that, then you have a very clear area to place your stop loss. You've also got the comfort of knowing that you've got this solid mass of protection in place, technical protection, in the event that the market reverses against you. So if you jump in short, the market starts to break below this level, you may be jumping somewhere in this candle. If the market does reverse against you, you've got this huge barrier, which is a protective barrier, protecting your stop loss, particularly if you put it above, if that fulfills your money management rules, but you could certainly put it above the volume point of control, or indeed above the lower level of what was support and is now resistance. The market then starts to move. We move through this relatively low volume, decent volume under there. Then you get the rally. You know, what are you seeing in the rally? You're seeing the classic example of falling volume. It's what you want to see because it gives you the confidence to hold the position. Then the market breaks down again through this level swiftly with the volatility trigger. On we go, and that is a classical textbook price waterfall. I couldn't actually draw one better than that. You've got nice widening spreads, you've got rising volume, and then right at the bottom, what do you see? A nice anomaly, lots of volume coming in. You know for a fact that this is getting to a pause point, if not a full-blown reversal. And if you're in that position, had a decent amount of profit in at that point, you would close out, or certainly close out some of the positions at any rate, because the expectation is that there is decent buying coming in here, and certainly enough to cause this market to pause. In other words, this is stopping volume. So what you're seeing coming in here is stopping volume. In other words, the big buyers are moving back in. We've had the price waterfall, nice move lower, and the buyers are starting to move back in droves. The trend monitor, you can see, not a flicker, bearish throughout, little bit of transition here, and it just keeps you in the position, and even through this doesn't even flicker. So I just wanted to show you that because that was last night, and those sorts of moves are the ones that really pay dividends, and you just have to, once you see that developing, you've got to weigh in and really fill your boots up on those particular trends, because today is typical. These are the days where it's tough, much harder to make money consistently because you're trading in and out on these 15-second or 30-second or 1-minute time frames all the time, and it's chopping about, and you've got to be quick on your feet. You're not going to stay in here too long. Let's just head over on to some other markets. Let's have a quick look at the currency futures. There's a lot of dollar selling going on earlier on. That's still continuing. You can see it here. This is the dollar. You know, it's just, this is a dollar matrix, if you like, because what we're looking at here are the majors. These are the futures. We've got the 6A, the 6B, the 6C, the 6E, the 6J, and the 6N. And the nice thing with the futures is they are all quoted in the same direction, so they're all quoted against the dollar. So this is not the dollar CAD, this is the CAD dollar. So when the dollar is being sold as it is at the moment, you expect this to rise. So it gives you another perspective on price action and in terms of volume. It also gives you a sense of whether that dollar buying is universal. You can see here the euro dollar is certainly not the strongest. Why? Because it's sort of flip-flopping around in the middle here, but the CAD is absolutely soaring higher. And that's why you're getting this fabulous trend here. And the dollar is falling equally strongly. So that's why that one looks the nicest of the lot. You know, it really has been moving strongly. We had a bit of weakness came in here. We saw some high volume coming in, might have set the alarm bells ringing, but it's carried on higher. We're still going higher, and certainly at that point, the CSI would have kept you in. We're moving strongly up into overbought, dollars down into oversold. We've got a similar sort of picture on the 6E, but not so strong. Same sort of thing on the pound. This is the pound here, that's sort of flat as well. So it just makes the point that what you're constantly looking for is you're looking for this divergence in strength. The reason cable is not moving strongly is because the pound is flatlining. There's been enough strength of selling in the dollar to actually get this to move, but at the moment we're just trading around this point here. The Aussie is moving, but not as strongly as this one. The euro is moving, but again, you've got this congestion building. And on this is the yen dollar, not the dollar yen, 6J. So this is yen dollar again. That's why these numbers down here look a bit curious. They're just the inversion of the spot rate. So if you just invert the spot rate, these are the values you'll come out with. So this is yen dollar. And the reason that's not moving is because the dollar and the yen are moving in the same direction at the same speed. And the analogy I've used many times before is of two trains leaving a station, where if they're both moving at similar speeds, the differential speed between them, they may be going in the same direction. There may be a little bit of differential speed, one moving faster than the other, but that in itself will not be enough to generate a strong trend. And that is why you're seeing the strongest trend on the CAD dollar, and obviously you'll see it the other way around on the dollar CAD. We're seeing selling of the dollar, buying of the CAD. Let's just have a look and see what's going on oil. There was a nice move on oil earlier on, which was down on the 5. Again, it's just indicative of how you've got to understand the price action and the use of the indicators and how they will help you. The volatility is triggered, snap move to the downside, lots of volume coming in here. You know for a fact the market makers and big operators are participating in here because of the volume generated. And the reason it's so powerful is because it is the fear of missing out. Oil per se is pretty bearish at the moment. It's pretty weak. It's been trading in a congestion phase on the daily chart for a long time. It's struggling to get above 42, 42.50 a barrel. It's trading around this sort of 40 level mark. The supply and demand dynamic is just so weak because of the lack of demand, and until OPEC step in and try and control supply, then the price is going to flop around here for some considerable time. So as a general principle, it is pretty weak in terms of overall price action. It snapped to the downside. It's the fear of missing out. If you saw that as a trader, particularly if you're already in here and you've seen this, you think, oh, fantastic, bang, down it goes, and traders will be jumping in, going short. They're immediately trapped into weak positions. That's the power of the volatility indicator, because it's telling you that the price action has actually moved outside the average true range. And the reason it's so powerful is because it is a way of generating your emotion to do something, to get into a market that's moving quickly. You can't help it. We all suffer it. We sit here, we see the market snap one way or the other, and you want to jump in. That's your immediate reaction. And that's why it's so powerful, and it's so profitable for the insiders and market makers. It reversed, came back up. All these traders trapped in here would have been stopped out or closed out, one way or the other, expecting the market to rocket higher. Hasn't gone that much higher. The weakness starts to appear here. You've got lots of volume coming in here, further weakness here, trading back down again, rising volume, falling market. Yeah, it's still weak, but it's not going to go very far at the moment, and we're back up to the volume point of control again. So there's lots of oscillations around here. And that was also true over on the 15-second chart here, same sort of thing. Won't go through that one. I think it was further back, actually. Sorry, it was a lot further back. I didn't want to go too far back on that one. And, you step down onto a slower time frame. This is a 10-minute. What have we got? Well, it's double the 5 minutes. So what we're seeing here is we see the volatility triggered again. Ton of volume coming in here. So we know for a fact we've got buying coming in here because of the depth of the wick here. We know we've got buying coming in. So we're going to see a rally, which we do see. We get to this point, it looks weak again. It's hitting some resistance here. We've got a ton of volume up here as well, and it's not going very far. It still looks weak. Market's trying to rally back all the time, and it's just looking so weak. Let's go and have a look and see what's going on the indices again. Oh, let's hop in on gold for a moment. See if there's anything else developing. Something to the upside here. Okay, that looks nice. Nice move there. Let's step down onto the 5. Let's have a quick look there. Okay, big candle here with a ton of volume going in. Okay, looks a bit suspicious, but it's okay. It's it's price and volume in agreement, but it's a little bit too high for comfort, but nevertheless, that's okay. We've broken away from the volume point of control. Lots of support platforms in here. Volume's okay on these three. This one looks, as I say, a little bit suspicious. I'd be looking for that to reverse off that, probably profit taking. But if you step down onto the 1 minute, here we go. The volume that always catches your eyes is, certainly in my book at any rate, it's the high volume. And what you start to look at, you think, hang on a minute, okay, what have we got here? We've got a candle here with a ton of volume under it, double the volume that we had under the last candle. That one looked fine. This one looks a little bit weak. Why? Because we've got too much volume going in for not enough delivery. In other words, price and volume are in disagreement. It's effort and result. If you put that much effort into moving the price, then this candle should be an awful lot higher than that. It should be up here somewhere, and it hasn't. It also got selling in there because you've got a wick to the upper body. So it's a little bit suspicious. It's looking a little bit as though, this was a very quick rally. Looks as though it's coming to a pause point. You've now got a 2-bar reversal at the top here where you've got a bearish engulfing candle engulfing this bullish candle. So if you put these two over one another, we're on, what are we on here, 5 minute, then, that will be a 10-minute candle. Sorry, not on the 10-minute, we're on the 1 minute, beg your pardon. So on a 2 minute time frame, you wrap this one over the top, and that will be a 2-bar reversal. In other words, you'd have a wick to the upper body, closing back down, little body at the bottom with a nice big wick to the top of it. And as long as that's on decent volume, that's telling you that's weakness. Short term, probably not enough to reverse the whole thing, but this is certainly suspicious. Let's have a look at the 10-minute. So we've got any volatilities on there? No, we're okay. Okay, we've got two big candles. But then you look at this one. This one is not quite as much as probably about here, I would say. But you've got twice the volume going into that candle. Question is why? So is that strength or weakness? Well, it's looking a little bit weak at that point, but let's see if it carries on any higher. Trend monitor is just starting to transition down there. Let's see what we've got here. Now we've got volatility. Okay, now we've got volatility coming in on 15-second, an absolute ton of volume coming in there. Interesting. Now that is an alarm bell. Don't know whether anything's going on in other markets, and it's got the news feed up. We've got volatility on this particular time frame, which is, sorry, just move that out of the way a bit. Oh, it's on the 1 minute. Okay, fine. There we go. Still moving though, still moving strongly. And you go down onto the daily and you think, okay, if I'm going to take that trade, where are we going? We've got some resistance in play here, possibly coming into effect. It's going to take some real effort. Longer term, we are very bullish on gold, have been for some time, wrote about it the other day. So from a longer term perspective, yeah, we are bullish. You've got to get through this region, and then gold has got to plow its way through all of this, up to here, through this level, out the other side. And if it gets to 2000, then again, it's away and free. But it's an awful lot of volume got to be driven into this level to get through all of that. Let's just go back and see if anything's going on the YM. Okay. We'll look on 5. Okay, doji. Resistance overhead, not particularly exciting. Let's go down onto the dailies in the 5 minutes, see what's going on. Okay, the NQ is still looking weak. 47, this is still pretty weak. The YM is trying to rally, but the NQ is not. And if you were going to trade anything, the question you've got to ask is, and it's a question you have to ask the whole time, is the NQ actually going to drag the other two lower? Because what you'll see all the time when you're looking at these three, and we always suggest you have all three up when you're trading, is there's been a lot of divergence over the last few months where particularly the NQ has been leading and the other two have been lagging, but the NQ has had enough momentum to actually drag the other two indices higher. Because you've got to remember, the construction of these indices is very, very different. The YM, you've got 30, the NQ, you're in tech, and the S&P 500, you're in 500. So you've got a very different composition of stocks which make up these particular indices, and therefore they do have different characteristics, which is what you expect to see. So the NQ, as we say, is weak. There is, let's just, in fact, what I might do is let me just go over onto the, let's just go here, because the NQ looks as though it might be moving. And just change these over. Scary thought, we were actually on the December contracts, all of these. There we go. Okay. Let's refresh that. There we go. Okay. Now you're on the NQ, multiple time frames from the 15-second through to the 15-minute. Is this going to develop into a potential trade? Quite possibly. Then you've got to decide on what levels you're looking at. Up to 1 minute. Certainly through here at 6:30 odd. Wouldn't be too bad. Let's go up onto the 3 minute. Same sort of thing. Let's go up onto 10. Okay, yeah, through all there. So you're really waiting for it to break away from one of these regions. And again, it's a question of being patient. Patience, patience, patience. Unless you want to trade one of these very fast time frames, perfectly feasible, perfectly fine. This was a little bit of weakness coming in here. Nice price waterfall developing, widening spreads, rising volume, fine, down to the VPOC again. So, what are we talking about? 20, 25 points. It's a decent grab. and then you're back into the little rally again. You know, this is not, it hasn't got the momentum yet, but this is very similar to yesterday's price action, where come later in the session, certainly for us at any rate, you know, it did develop that momentum and a break, and you've just got to be patient and wait for that opportunity to come along. Trend monitor's turned bright red, so you know it's got that bearish sentiment at the moment. Certainly not looking strong. You can see the trend monitor here is red, it's red, it's red, it's red, it's turning red on 10, and it's just giving you that sense that, you know, this is about to become a very fragile market, which is about potentially to crack wide open, and certainly one I would be paying attention to right now. Okay, I've run on over time. Sorry about that. I think, let me just check with Anna. Hold on a minute. I'll just try and answer your questions, Tony. Sorry, I just wanted to check and see if Anna had answered them. How does the market move the price higher trap? Well, they're making the market. So, you know, wherever these markets are made, it's, you know, that is how they do it. It's as simple as that. If you were creating a price for anything, then you could adjust that price accordingly and charge whatever you wished. And it's a similar sort of thing here. The participation or lack of participation is based on, you know, the market price action. And if you are at the center making the markets for these instruments and trading, then, you know, that is the way it is done. It is the fundamental principle of volume price analysis that we follow the market makers, because they know what they're doing. They know where they're taking the market next. And the one thing they cannot hide is volume. If they're participating, you will see the volume. If they're not participating, then you won't. So I hope that answers that one for you, Tony. Just to wrap up very quickly, this is where you'll find the indicators over at quantumtrading.com, MT45, NinjaTrader 78, and TradingView. And TradeStation, yes, it is coming, TradeStation 9.5 and TradeStation Securities version 10 and above. If you have an Interactive Brokers account, you can run it on the TradeStation 9.5. So you have all the advantages of a deep discount brokerage along with the benefits of a wonderful platform, TradeStation. And it is an awesome platform. It's very exciting, and we have a radar screen with it on both systems. So it's terrific. And on version 10, it's with TradeStation Securities. We will be spending a lot of time, we will be doing separate webinars with TradeStation, and also focusing much more on stocks also. Once we've done that, we'll be going on to TradingView, adding all the other indicators there. So if you have the full TradingView package, you will get all those extra indicators free of charge. Once we've done them all, then the price will go up to the full package of MT45. So it's not a bad time to invest in the TradingView package. In terms of Anna, you'll find all the analysis, all the videos and what have you. Go on annacooling.com. You'll find all the books there on Kindle, on Amazon rather, and they're both in Kindle and paperback format. Finally, on the Forex Education Program, you'll find that over at quantumtradingeducation.com. If you're focusing on Forex, then, you know, this is a complete program. It literally is huge. It's 250 hours of video. There's about 440 odd lessons in total, I think, and it covers everything you need to know to trade this market with total confidence, from the psychology of trading, which teaches you about yourself and therefore what tactics to employ and take to the market, the fundamentals, relational, technical, mechanics of trading module, and all the others below here. There's lots of VPHR examples, how to use indicators, putting it all together, and loads of topic webinars as well. We explain, you know, topics to how your tactical approaches, how you're going to approach the market. And indeed, much of this is also can be applied to other markets too as well. It is, VPA is a universal methodology. You can apply it to any particular instrument. As long as you've got price and volume, that's what you need. And that's the VPA Traders, which is the chat room. Hope you've enjoyed today, and we will be back next week for the London Forex session at 7:45 UK time. Look forward to seeing you there. Enjoy the rest of the trading day and the trading week. Stay safe and well. And we will be back same time here next week at 3 o'clock, or as I say, 7:45 UK time for the Forex session. So thanks for coming along. We do appreciate it. Hope you've enjoyed it, and see you soon. Bye for now.